How to be an awesome angel investor that makes you lots of money. How do you get the right deal flow to invest in the right startups? How much money can you make from your investments? Hi, my name is Darshan Doshi and welcome to Swatantra. So let's get started. What's the overall ecosystem of startups in India and angel investments in India? Here are some stats for you. According to the Startup India movement, there are about 80,000 to 1 lakh startups which are active in India. Out of these 1 lakh startups, there are about 20,000 tech startups, technology startups. But how many of these 1 lakh startups actually receive venture capital funding or angel investments? Based on the research reports that you take a look at, whether that's Inc. 42, whether that's IVCA, any of these reports, you'll find numbers that only 800 to 1,000 startups out of 1 lakh startups actually get seed funding. What is seed funding? Seed funding is the first check that goes in the startup, which is outside of the founders and family. This seed funding could be 50 lakh rupees or it could be as much as 5 crore rupees. Right? Now your question may be, well, that sounds great, but what happens after this seed funding? After seed funding, you have Series A funding. Series A funding could be anywhere from 5 crore to 25 crore. Out of the 800 to 1,000 startups that receive angel funding, each year there are about 250 to 380 startups who raise Series A funding. Now that's a very small number. Why should you invest in startups? Startups as an asset class is one of the riskiest asset classes. But it is an asset class that you should enter into to invest, to make money, and to diversify your investment. Think about it as some amount of your money is invested in real estate, some amount in gold, some amount in stocks, some amount in startups, and maybe a few or a small, very, very small amount in cryptocurrencies as well. Now that is called asset allocation. So why should you invest in startups? It is one of the riskiest asset classes, but also giving one of the highest expected returns. Now let's understand this context of India. How do you invest in startups in India? India is the third largest startup ecosystem, like I said earlier, and it's growing rapidly. It's maturing really, really fast. So a lot of the US investors and people from around the world are investing in Indian startups. Why? Because they see an opportunity to make money. And that is why you should invest in Indian startups. Second part is because you're part or living in India, working in India, you have a better understanding of which startup may succeed and may not succeed. So you have a lot more context, a lot more network. You understand what would it take for a startup to go from seed to Series A and achieve that kind of growth. So that could be a competitive advantage for you, where you might understand everything about the domain, say retail or D2C or SaaS, building in India for the world, right? These are all the things by which you can get an advantage to identify the right startups to invest your money in, which will give you incredible returns. So how does one make money by investing in startups? Let me simplify it over here. You invest, say 3 lakh, 5 lakh, 50 lakh, 1 crore in a startup, and you get equity in that startup. After you get the equity, that startup grows over a period of 1 year, 3 year, 5 year, 10 year, or 15 years. When that startup grows and goes from seed stage to Series A investment or Series B investment, that is when you, the angel investor, can get your returns through an exit. Which means the Series A investor is going to buy out your equity, or the founder may buy out your equity. Now let's take a look at what are the kind of returns that people have got. Sanjay Mehta is one of the top angel investors in India. He invests anywhere between 50 startups to 100 startups each year. And these are some stats that he's shared in public domain. Over 1 year period, you can expect 1x return on your startup investment. Over a 3 to 4 year period, you can expect about a 3x return, which means if you invested 3 lakhs, you can expect about 9 to 10 lakh rupees in a 3 to 4 year period. If you invest over an 8 year period, then if the startup survives for 8 years and you have been an angel investor for that whole 8 years, you can expect about a 10x return. To get a unicorn, you might have to wait 8 to 15 years, depending on how fast that startup grows, and also depending on whether the new investors are willing to not buy you out. Now, this is dependent on a lot of factors. So take this data with a pinch of salt. On another side, 3 out of 10 investments will actually give you return, which means 7 startups are likely to fail and not give you any money. If you've invested 3 lakhs, 5 lakhs, 10 lakhs, you got to write off that investment. That is why they say startup investing is one of the riskiest asset classes to invest in. How risky is angel investing? Let me break this down for you. It is one of the riskiest asset classes. There are about 1 lakh startups in India each year, out of which 20,000 are tech startups, out of which 800 startups get angel investment, out of which 250 startups raise institutional investment, that is Series A and above. So these are very, very small numbers. The odds are against you, but the returns are phenomenal too. It is very important to have a portfolio approach towards startup investing. What do I mean by this? If you invest in 10 startups, 3 startups are likely to give you returns, any returns, 1x, 3x, 10x, 100x, right? Which also means 7 startups are going to fail and not going to give you any returns. You're going to have to write them off as losses. And that's why what I suggest is have a portfolio approach where you are investing consistently, like SIP, same amount of money over a period of time, every year, say 3 years or 5 years. If anybody tells you here is guaranteed return that this startup is going to work, please be very careful. Based on my experience, I don't think the best investors also know which startup is going to succeed and give returns versus which startup is not going to give you any return. Why? Because a startup is a high growth entity, and during high growth there are risks. So there is a very decent chance where the company might run out of cash flow. There is a very good chance where they might not be able to dominate the market the way they expected it to. Maybe COVID happens and suddenly you're left high and dry, right? So there are so many reasons why a startup may fail and it just doesn't work out. So these are the risky things. So when you invest in a startup, always read that last line under risks, which is be ready to write off this investment, how much ever amount that you are putting into the startup, as a loss. Only then should you invest in a startup. Before I get into understanding when should a person take the risk of investing in startups, can you just take a minute and support me by subscribing to this channel? When should a person take the risk of investing in startups as an asset class? You have a first home, you have an emergency fund, and you have low risk investment portfolio of about 1 to 2 crore, which is giving you good returns. Only when these things are in place should you think about investing in startups. Moreover, to invest in startups, you need to have a 3-year plan at least, if not a 5-year plan. In these 3 years, you should be investing in about 8 to 10 startups each year with a minimum ticket size of 3 lakhs per startup. Now let's do the math. What this means is you need to invest about 30 lakh rupees in startups each year. That is 90 lakhs over a 3-year period. Why is this important? Because you need a portfolio approach if you want to get some significant returns over your startups. So now you've decided you want to invest in startups and you're financially ready to invest in startups as an asset class. How do you go about getting a good deal flow of startups to start investing? Great question. There are 2 ways by which you can do this. The first way is you can become a limited partner in a venture capital fund and invest 1 crore, 2 crore, 3 crore, whatever it might be, directly in the fund, which invests in about 20 to 30 startups over a 3-year or a 7-year cycle. For example, one of my friends, Abhishek Prasad, manages Cornerstone Venture Partner Fund. It's a fund that is focused only on SaaS and he invests in the pre-Series A, Series A stage. If you come in as a limited partner, you get the benefit of all the investments that the fund makes. So that is one way to become an investor and get the benefit of investing in startups. The second way is create your own deal flow. There are so many angel network groups across India. You have the Mumbai Angel Network, you have Let's Venture, you have TIE, the Indus Entrepreneurs, you have Venture Catalyst. These are so many groups that are, who invest every year in about 10, 20, 30, 50 startups. So you can join these groups, pay them an annual fee, sit in the conversations, understand how others are investing, and then get started to invest as a part of that group. Another way is Angel List. Angel List has democratized the way startup investing works. You'll find a lot of great syndicate leads who put together startup deals, right? So you can join the syndicate and start investing whatever might be the minimum amount or whatever the amount that you have fixed per startup, per investment. So those are the ways by which you can get a good deal flow. If you want to generate your own deal flow, here is what I suggest. Become a part of the incubator or startup accelerator programs. There are 400 plus startup incubators and accelerator programs in India. Join as a mentor, advisor, and contribute wholeheartedly. You know why is it called angel investment? The angel word comes where you go in and you help the founder, the startup, the founding team to grow the startup. And that is where you then put your money and say, here's my advice, here's my network, but I'm really I believe in what you do and I want to see you grow. That is what angel investment is all about. A good deal flow makes or breaks your startup investment returns. It is the most important thing if you want to make money from investing in startups. So if you are interested in getting access to the top angel network groups or a list of the top syndicates, go to the YouTube description. There is a link over there. Click on it and download it for free.